Ladies and gentlemen, let me take us through how to appropriately take A plus signal on the on PBX sniper calls scanner. Now, of course, the your basic knowledge of market is very, very good, but nevertheless, we want a situation everybody should be able to use it, right? And then I've promised that I'm going to be doing more kind of follow-up. If you subscribe for this scanner or any member of PBX Club, now you should be able to know how to make use of this scanner properly. Okay, now first rule is I've itemized the rule. If you have subscribed, I'm sure you have access to that document, Word document that you should go through, some of those parameters because it's a scanner that works on price actions, purely on price actions, and then candle pattern. So if that's the case, now the first rule I always say, just at least basically just understand what's the trend of the market. Even if you just go to a 1 hour time frame, for instance, look at it now like this, okay? You could see that this market is an uptrend, right? So I'm not going to do all those, structural adjustment and all of that, just for you to have an idea. Now, basically, always allow your chart to be maybe on 15-minute time frame, but to take a trade and be able to get a proper trade early enough, so you have to go to your lower time frame. So probably 5 minutes, 3 minutes, 1 minute, at best time to find more trade. But if you are the one that just trade once in a day and all of that, okay, so 15 minutes is okay for you. But if you are the time you want to get more trade, and of course, why wouldn't you want to get more trade? Because this is scanner and this is gold. Gold has a lot of volumes and all of that. Okay, now, so if you look at this now, so pay attention when this scanner come out. Now, this scanner come out, number one, when you see that the market has swept liquidity. Number two, when you see that market have broken a structure. All right. So in all dimensions, it will have come out when a sweep of liquidity happened and all of those things. So you see that this scanner start coming out. Please pay attention to what I'm saying now. Please, I beg you, pay attention to what I'm saying now. When the scanner come out, relax. Don't be in a haste. Don't be in a haste. First condition is that where did the scanner come out? Remember all of those lines you are seeing, they are not just wasted lines. They are, I call them pips levels. Okay? PBX pips level, but they are generally psychological level. So, and if they call them psychological level, they are support and resistance. So understand that perspective. Okay? So first of all, if this scanner come out, at what level did it come out? It come out on the area of those pips level, which are support level. So if the market is going up, irrespective, now you discover that this scanner come out. Look at this. This is 5 minute time frame. These are people who hold trade for a longer time to an extent. Because if you look at this trade now, to a longer time. So if you come out, wait. Like now, he come out like this, wait. Because it won't stop when this market was here. The moment it crosses this, the scanner will come out. It does not lag, but it repaint because it work with price action and other blocks and liquidity sweep and all of that. So if it's on, it has to be flexible to follow the situational issue. So it doesn't repair, it does not get static, bring another one. No, it doesn't give false signal, but you have to wait to see the accuracy first. So when the markets come out, and then this cannot happen. Oh, buy or sell. Okay. I hope you can see my own properly. Okay, let me see. Because sometimes I reduce my own to one. So let me take it to two so that you can see properly. Okay. All right. Thank you very much. So you can change your own color background too, instead of red, to the color you want. Now, so the moment they come out, wait. Secondly, because those of you who are beginners, always wait. And that's why the best time to go back to so that you can find early entry is like 3 minutes, 1 minute. So I'm going to go there. But 5 minutes, people who don't take too many trade. So 5 minutes. Now look at it. The scanner come out, wait until it stand. It has a point when it stand. It doesn't, no one come out again. So like this one, to be coming out, right? Look at this one that's coming out. By the time you take this liquidity, you will see that it start bringing scanner. It starts bringing signal to buy. So, but you have to wait until it stop. So stopping mean the first candle that will bring it out, it will be rolling with it. Wait for it to stop, and the scanner stop with it. Then the next candle painted, and of course consolidate with it. Example, look at this. Those of you take one, maybe one trade. Don't want too much trade. So this one has happened because it takes signal on swing points, on change of state of delivery. These are pluses and all of that. But I don't want to complicate speaking all of those jargon for you. To take it simple, okay, don't come out to let me use Nigerian language, pigeon program. So it is out. So once it's out, very simple. You now wait. Let the second candle follow suit, exactly to the direction of the where you are taking the trade. Example, this one. The market was rushing down, and then the scanner come out, right? Let the next candle come in the direction of the trade, like you are buying. So this is a very perfect one. But take note, sometimes this is like a change in state of delivery. If it's too bogus, don't take it because when you are going to put your stop loss, if it's too unrealistic, so don't take the trade. You get it? Okay, like this, I still have a way of going down to a lower time frame. But look at this trade now. It's come out here. You wait for this candle. I don't wait for this third candle to happen, but you wait for the candle the third candle because this is the first candle, this is the second candle. So, but you will see that this is the first candle. So let the second candle in the direction of that. If it's a buy, let the second candle come in the direction. The exceptional cases, a candle that will come out, it end up being bearish, but the market still go further. But don't bother. So let's go this way. You are going to take the trade. Look at it now. Look at this. You can always learn this thing. Take this and then come to this point. You see that? So when you enter the trade, the thing is that your stop loss of this one will be too big because as you know, it's going to be 260 pips. So, but it doesn't matter what is your stop loss. Once it has done 100 pips, take profit. Okay, somebody asked me, where should I take profit? At those your pips level, which is the psychological level, that is the place you are taking profit. This is 100 pips. That's why they are there for you. This is 200 pips. This is 300 pips. And I say taking profit with this is to start from 50, but sometimes may be very fast because gold can paint. But sometimes when the market is so sluggish, please start taking profit from 50 pips, 100 in that order. And where do I take profit from 50? The middle of those lines is 50. So you take profit. So as you take profit, but if the market is moving very well, you can take 100. So it doesn't waste time to hit 100. How do I wait? You don't need to wait. You just set the take profit at those levels. If you look at this now, that means this 100 will be for 5,000. So at the 5,000 level, you set your take profit. At the 5,010 or something, you set another take profit. At the 5,020, you set another take profit. Do you understand? Then now this is the point where it's more interesting. Once the market has given TP1, TP2, before TP3, now take your stop loss. Now back to where you entered from. You hear me right? Once you have finished TP1, TP2, take your stop loss to where you have entered from so that the remaining position. And in this note, I always say that if you want to enter a trade, don't enter all your trade at a go. Okay? So let's say you are trading with $100. So you are trading with $100 and it's a micro account, for instance. So $100 is going to be how much? $100 is going to be, I put this thing, one of the training I did. So you can take this site, market-bulls.com. So if it's $100 you are trading with, that means you have 10,000 cents. Okay? 10,000 cents. And I say, okay, maybe you can just reach like 5% of your account. So your stop loss is 260 pips. Let's just call it that way. So let's do that. Okay, you can use 0.19. So if you're going to divide this into like 5 places, that can be, you can use 0.02 in 6 places. Okay? 0.02 in 6 places. So when you are entering this market, you are entering 0.02 in 6 different places. So the first 2 take profit here, the second 2 take profit. So the third 2 or the last 2, 1, you take it. 1, don't place take profit. So the moment TP1, TP2 hit, so take your stop loss to your entry and then continue to ride the market. Okay? So if you look at it now, after TP1, this is TP1, TP2. After TP2, you see it does not come down to this point, right? If it's after TP1, you take it here, it will push you out. So after TP1, TP2, it didn't come here. TP3 was taken. So you have not exit the TP, you have not exit the TP3 and TP4. So you still have that small position holding. Now, when should I exit that? When there's a counter confirmed, not just counter confirmed. Counter confirmed means I'm sure maybe TP3, when this TP3 hits, So when it's counter confirm is that the scanner bring another opposing signal. Opposing signal, now you bought here, you give this opposing signal is confirmed. I'm sure you're going to exit at the end of this. The market continue again. When you check here now, it's going to bring another signal here. You enter. Do you get it now? So that's the simplest way of entry. Now, if you're on 5 minutes and it's too bogus, I step down to 3 minutes. Take note, when you step down to 3 minutes, you're going to find the signal more refined. Are you following now? Now, look at that signal that was so long. So that means that signal is here. This is the first candle, this is the second candle. Though, those of you who are beginners, because this is called power of three, okay? It's called what? Power of three. Now, over time, you are going to learn more and you enjoy taking trade in this dimension because it's going to give you appropriate, fantastic entry. So the whole thing that this cannot work with is a swing point, and I told you change in state of delivery. This is a change of state of delivery, because don't let us model the whole thing together. So once that happens, so you wait for the third candle to come out. So which is second candle into you, because the one that carried the signal is this one. The follow candle to it is this one. So let this follow candle now what? Go to the direction of the market entry. So that means at this point, where you're going to take your entry will be here. As this candle close, wait for the second candle to open and close toward the direction. So your stop loss is going to be below this swing point. Now you can see now it's reduced, one ratio, so 21 and all of that. So here is your first take profit. This is already 150. That's big. Then the second take profit. So ordinarily, you can take the first take profit here or below here. So, but let's see here. Now, second take profit. What did I say? The moment the second take profit is taken, take your stop loss to your entry of the remaining positions. All right. Then you have the next profit. Now, you don't need to wait for all of the profit. If you are satisfied with just 100, 200 pips, take it and exit. Do you understand? Because some people will like, I'm trying to trail. You are a beginner. You don't know how to trail. You don't know how to just set your take profits. If you enter 2, 3 position, TP1, TP2 is okay. Are you following, please? TP1, TP2 is okay. So, bam, bam, bam. So if you enter 5 or let's say you enter 6 position, TP1, 4, TP2, remaining 2. Close, bam. Wait for another one. Do you get it now? Okay. So it's going to be more simpler for you. Then this another signal. Look at it. The scanner says sell, right? Fine. And then the following candle. So a very fantastic one is that when the following candle that engulf the first one, make a lot of sense, right? Then you now say, okay, I'm taking an entry, sell after this candle close. Then your stop loss. See, the stop loss is so long. Normally, when it's close to the pips level or psychological level, you take it above. But this one is not too close, just at the middle. So then this 120. Your first take profit is here. Okay, so that is about 130 pips. So maybe you enter 3 or 7 or 6 position, half of it first, or 2/3 of it first take profit. Then you take the second take profit down to this point. Look at what happened. Now at this time, there come a counter trend, a counter entry, a counter signal. So this counter signal makes sense that, okay, even though you have taken profit here and you are waiting for this take profit, now this signal come out, is already countering this one, you can exit. As you exit, you are now waiting. Look at this. Look at this candle now. As you are exiting, the market has given you another buying opportunity. Look at it here. This candle. This candle is the one that carried the signal. The close of this second candle to it is your entry. Okay? So that means you are longing, haven't taken your profit of the first one that you short. Okay? So don't entertain any fear. If you are going to lose, lose. Okay? So if you're going to stop your now, this one is not too close to this, so you can take the stop loss there because there's a sub minor. So this is 99 pips, 99.3 pips. So that means your first take profit, look at it, is actually here, 70 because it's more than 50. So, or you can now say, okay, here, 170, and then the second one. Once this one is done, you are good. You say, okay, I'm okay. My profits are given to me. So now, if you are still holding, maybe you're targeting that up. What happened? Maybe you're targeting this up. Now, this is not a good signal for me and you. Okay? So, because even if you sell, it's not a good signal. But maybe if you go to 1 minute, it may be a good signal. This is not a good signal. Do you know why that? Do you know why that? This one says sell. Yes, fine. This candle now go to that direction. But the best bet, take note, please. The best bet is that this candle should be either equal to this candle or longer than it. It makes more sense. Okay? It makes more sense. Or actually start from tip of it and go this, it makes more sense. So this one is more risky. Okay. If you take this trade, well, you are just taking it and probably after I've seen the signal and it has stopped. Fine. You may be good, right? Okay. So, but you have to be careful in this type of signal. Okay. But nevertheless, now, so sometimes you now see that, okay, so the candle, especially when the candle closes, because this candle was having a down close week. So it's supposed to have an up close week, meaning that a seller has still taken charge. So this can happen fine, but be very careful on the signal you take so that you not be under pressure. I was not going to take this signal. Okay. I was not going to take the signal. Having known that even the market direction is up, I was not going to take the signal. Now, I'm going to take the signal, but you may not take it. This is called tweezer up. Now, and under where? Under the pips level, which is the psychological level. So this is the signal that still control this one. So this is a total rejection. This one called tweezer up candle pattern. Then I'm going to take it. But you don't need, if I'm talking to a beginner who don't know about all of those things, your own is that you are following the rules of this. So if you go to 1 minute, this is a very powerful one. In 1 minute, it gives you a lot of entry position. But you have to be smart too, because if you're not smart, you'll be waiting, or you can jump in uncontrollably. So you may not be able to control some of those markets that are coming. So this is the best signal. So you have a week, so which is this. Then I say when this candle closes. So that means your entry of this market is this. Can you see that? So at this close of this candle, make a lot of sense. Then your stop loss below here. So that's about 120 pips or there about 124 pips or 122 pips. All right. So here, your TP1 done. Your TP2 done. And what do I say? The moment TP1 and TP2 is done, adjust your stop loss. Number one. Number two, if you are not the type that have time to know how to trail stop loss, I've entered my market, TP1, TP2 hit, I'm okay. I'm satisfied with that. Have a nice day. Wait for another signal. But always have one position that you want to trail, because sometimes the market will not come back and give you another signal again. Do you get it? All right. So then the moment you put trade stop loss, the market is coming down. Don't entertain unnecessary fear. After all, you have put your stop loss to your entry. The worst that will happen is for it to stop you out. You have nothing to lose. Does that make sense? It makes a lot of sense. Thank you very much. So now, if you go back here, you see the market come. Now, you may not take this because you do not understand what I call change in state of delivery. But that will have been a very perfect entry, re-entry. But you still have your position open and you are trailing it. See where you are stopping it. So that means that your market you entered from here. Let's look at it. This last position is going to do over how many pips? It's going to do over 530 pips. Now, to overcome the fear of this one, for instance, you have entered now, look at it. To overcome the fear that this one may pose to you, this is what to do. Once you enter it and you are trailing the stop loss, so look at it now. You are trailing the stop loss. I'm going to expand. Now leave that 1 minute, okay? So that fear will not catch you. Leave that 1 minute. Go back straight to 5 minutes and stay there. Now, when you go back to 5 minutes and stay there, see what's going to happen. So why this market is shaking here and there, remember, you have put your, what is it called? Remember, so you can see that entering in 1 minute had make you to have what we call sniper entry. So remember, yeah, that's what you have, sniper entry. So when you see the market start happening, like this signal start happening in 5 minutes, start rolling, you go to 1 minute. So now, if you look at it now, if you come back here, when you go back to 5 minutes, all this shaking that will happen here will not move you. In fact, that will still build your confidence to even stay to this level. Do you understand? Because at the end of the day, the market still continue rolling up and all of that. So you will not be able to have extension to this point, probably, or even here. I think it touched that point. That's about 700 or something pips. But I'm not saying all the time will work out for you, but you have to understand, the dimension of the signal. Does that make sense? So it's very fantastic when you are taking a trade. So 1 minute, 3 minutes, 5 minutes, 1 minute, 3 minutes, 5 minutes. Sometimes when you stay on 15 minutes, you may not see signal on time. All right. And when you see signal, your stop loss may be very bogus. It's gold. So imagine here now. So now when you come, you just leave it on 15 minutes. The trade that went up, you won't take it. Because this trade is still respecting the down entry point. It's not going to bring another one. Look at it. It's not going to bring another one outside this old one. All right. So it's still telling you that this market is still continue moving up. Do you get it now? So now this is the place you find an entry. So if you're using that 15 minute, so look at it. So now that means you are going to be in this side. And I say, okay, look at this. And then that means you are going to be entering here. That will be too big, you know. So look at it. This is about 250 pips. Well, not too big anyway, but you may not really find trade so much like that. So about 230 pips. And then okay, of course. Yeah, 100 pips here, 100 pips here, stuff like that. So you allow it to run. But you can be intimidated because look at it. Market swap back again. Ooh, you're afraid. Oh, it's good to hit my stop loss and all of that. So eventually, I think it delivered to this last point. Sorry, excuse me. Okay, to deliver to this last point, which is about 600 pips. It makes a lot of sense anyway. So those of you take just one signal and all of that, even in 1 hour, you can still have the same thing. Those of you take just one signal and all of that. So you can see this in 1 hour. So, but you can see now, how are you going to take this trade? Go this. If it's the currencies and all of that, it's not a problem. You get it now. So let's go. I hope somebody have learned. So this is good. Let me go to Bitcoin and show you something again. Look at Bitcoin. Okay, look at Bitcoin. So Bitcoin, I've showed you how to set the Bitcoin on too. Now, so if you look at this trade now, so imagine if you are not taking profit in between and all of that, you return back here. That's a waste. That's a waste. So having entered here, for instance, look at take profit here. That should be how many point, and then look at the other take profit here. You now give another signal. Look at the sell signal here. So look at the sell signal here. So if we're taking the sell signal, so we're going to have something like this, short, and then probably let this candle close. But this was not a beautiful one. This is a candle that actually closed towards your direction. So your stop loss is going to be above this point level. That's 351 point, right? So of course, you're not going to target this one. So you're going to target this next one. So that's about 720 point. Um, so that's almost 1:2 risk reward. Makes sense? About 2:2 risk reward. Now that's going to help you to this point, and then struggling here, just put your stop loss. If you're going to hit stop loss, let it stop your stop loss instead of disturbing yourself. Now look at this one. Right, this one was not too beautiful, but it's good. Why is it good? Because you have this, and then you have a bullish candle towards your entry position. That make a lot of sense. But sometimes if you want that close above it, make more sense. Okay, so now if you're going to take that, this is Bitcoin. Okay, so you're going to take this. Now I'll clearly explain something to you about Bitcoin trading on. So now this is the challenge. In between here is 250. So you can still make your stop loss there. So that means your first take profit target should be here. That's about 597 points. Now let me clear explain something to you about Bitcoin. So Bitcoin is highly volatile, right? But the point can be controlled. So one standard lot in Bitcoin, so every point in Bitcoin, one standard loss is $1. So let's say you are trying to conservatively protect your account. So this is 596. So if you use 0.1, so that's 0.1. So you use 0.1. So your stop loss is about 259 points. Let's not call it 260. So if you use 0.1, so you're going to be 0.1 times 260. 260, that's about $26. All right, that means you're going to lose 26 bucks. So if your account is not big, so instead of using that, so you're going to use maybe 0.02. So 0.02 multiplied by 260. Oh, sorry. 260 multiplied by 0.02. So that's just about $5. Okay, so you are good, right? Oh, fine. So if the market now is going to travel to this your take profit level, then you are looking at okay, $5. So that means 597. So 590, just call it 590, 597 or something, multiplied by 0.02. So that's going to give you about $11. And then you're good. Fine. Yes. So if the market go well, so you can see that market, so you can see Bitcoin is just ranging, struggling, and all of those things. These are basic things you need to understand using this scanner. Does that make sense? It's so beautiful. It's so simple. You don't need to have so much problem, how to identify this and all of that. So this is how this scanner is used. And then you have to recognize and obey the rules so that you will not put yourself in trouble. Okay. So the next one I will do, those of you who purchase the SMC, smart money concept strategy of it. Okay, is this. Let's go this way. Okay, let's go this way. Let me refresh this one. Okay, so I have different SMC strategy of it, right? So look at GBP USD. Okay, so can go to 15 minutes, you can use 5 minutes. You can see, not that you cannot scalp currency, so maybe you're afraid of trading gold or BTC and all of that. Why not? You can scalp currencies and all of that. So even with the Bitcoin too, you can see this is like, even with the gold, okay, look at it. Yeah, so I have, yeah, you can see now I was targeting that the market was going to crash down here again. Yeah, that's what I do. And that's why the market is just like pushing down. So if you look at 5 minute time frame, all right, so this give you a kind of outlook, not necessarily the pips level now, psychological level, but work with like a kind of smart money. So look at what it has done here. I think this is, look at buy side. So let me take out the sniper this thing. This is PBS PBS P and L toolkit, right? This is just like our trading strategy itself. Okay, so the sell side liquidity, buy side liquidity have not been swept anyway, but it will make more sense if they have swept it. But what happened is this: you can see that your scanner have only told you to sell, and market pull back, and then this is a rejection, like what do we call it? Order block or supply zones. All right, so you have that market came down, say market structure shift. That means you expect this market to go up. So before you go up, you have taken your profit. But even though you are looking at the market to come down to this point or even return back to this demand zone, this is like the demand zone, then the market should have taken some profit. So they're taking about enabling the our sniper call, then you will have seen the trade here. Now you see, like what I told you, not necessarily those even the psychological level. So you see that it gives you signal, and then there's a candle close towards the direction. That makes a lot of sense. This 5 minute time frame, and now that means you're going to sell, right? So the only difference here is that if you are not an advanced trader, you will not know where to take your profit. Okay, so well, if you can measure, you know that, oh, I've done 100 pips, I've done 200 pips, so as to be taking my profit that order. So that's the why the psychological level help you a lot, to identify some. If not, you'll be drawing your say, okay, until the market come here. Now, gold is very stubborn. He may not really come down to that point again and then sweep up and all of that. But if he's going to come down to this point, that means you're going to do about 790 pips. The not keep taking, that's about like 800 pips thereabout. So that's one of the lovely thing about this kind of, you can set up, readjust, and move in. So I'll show you another yes, so show you another um, smart money system. So look at gold. So look at gold. So it's telling you now that we're in which session? London session. Look at it. London session. We're London session now. Oh no, London is about to open. So what it shows there is that the market, look at it, I tell you to sell. This is gold, right? So this one is that you go from one area of interest to another area of interest. Now, it has auto fit for Fibonacci level, but you don't necessarily need to enable it. You can just work with this. And then this is a fair value gap. This is a fair value gap. This point area of interest. Why? Because it's like a kind of other block area or demand zones and stuff like that. So when you sell from that point, even here is already big money, and then another more selling point and all of that. So when you are doing this, of course, you want to work on one instrument at a time so that not to give yourself unnecessary problem. This is another SMC strategy. Now also look at the gold. Also look at it. Very fantastic, right? So this is a fair value gap. If it's inverse it now, this is another fair value gap that I've been tapped into. So this cannot consider to be very strong. This is a breaker block. Okay. So those of you who are trading SMC, all right. If you purchase this, I'm going to teach you specially on smart money concept and all of those terminology and strategy in them. Okay. And so you'll see that, okay, this market, of course, your sniper, PBS sniper calls are already giving you a signal. You got a fantastic one. And then you're already in the trade here. All right. So say sell, or let's look at here. Yes, sell. Then that means you're entering at this point, and your stop loss above this point. Okay, it's 100 and something pips, and I'll probably Even if you look at this one already, this is about 150 pips. So 100 pips is your first target profit and all of that. Then you extend. So if you see this fair value gap, definitely you want to say, okay, I'm going to pause here because the market could get there and reject. And I don't think it has been mitigated. Okay. So then getting to that point, that's about 320 pips. So if the market is going to give you extension, so you put in eye on this breaker block if it's going to happen and all of that. So can you see that? So smart money concept. So if I still go to 3 minutes, you can still take that. Go to 15 minutes, you can still take that and all that. But I think if you go to 3 minutes, it's going to be too more noisy. I think so. But it's already change of character, break of structure. So the market return, I think it's already forming a breaker block here, if I'm not mistaken. If you get rejected, that means you continue to go down. This is a bearish breaker block, and this is a bullish breaker block. Okay, so when you purchase this scanner, I'm going to teach you and how to do the settings and all of that. And that's one of the lovely things you can enjoy using all of those scanners and then trade and then be profitable in the market. Does that make sense? And so this is very lovely. Okay, it's very lovely. And so you're going to be enjoying it and be fine with all our strategy that we introduce to people, right? So make a lot of sense. So you can see gold and also returning back down here. So if you're going to go back again to this area of interest, and that's going to be another journey entirely. Okay, so you can see that. So you go to 5 minutes, you go to 15 minutes, so go to 5 minutes, right? Okay, so you get that. See the signal. Fantastic. So this is the advantage of this is the simplest. Okay, the simplest and more direct. So you can take your trade. All right. So by now you take your trade here. Your target, your take profit one is done. Pem, 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 and then the market return back. Okay, don't be afraid, and then continue to go your TP2, pen, pen, pen. So as the TP2 is pen, pen, pen now, you put your stop loss below here. So if the market will continue, congratulations, you are lovely. I'm sure everyone should love this one because this is the simplest and you don't need to complicate issues for yourself and all of that. I think people want to be trading on like 15-minute time frame and all of that. Yeah, so that to shows that this is going to be more recommended for you because you can check order block, fair value gap, and all of that. But you may not be taking more trade like those are going to be using the other scalping. All right, so ladies and gentlemen, that's the simplest thing you can ever talk about in this space. So I'm putting you through how to make use of these tools and all of that. It's making sense. So look at it on Euro USD. You can see after the break, other block. So become a breaker block, retest to it, massive, another block, breaker block. If you come back here, it's going to bounce, it returns to it. And that's how you actually make money with the rest of my using all our tools. Does that make sense? So I'm sure I've put somebody through basic things about the scanners and how to maximize it as much as possible. All right. Should you have any questions, don't hesitate to ask me. And of course, those of you who want to subscribe, if you have not subscribed, it's very cheap. $200 yearly subscription. That means you are paying less than $1 every day. I call it self-generated signal scanner. It's so simple, straightforward, and then you don't need to know too much. Okay, just to know basics, and that's the basic you are supposed to know are things I'm explaining now. And so headache of, oh, I need to, no, no, no. And that's going to be fine. Make a lot of money and help yourself. Does that make sense? I'm sure somebody is loving it right now. So you can go to the comment section. My phone number is there. You can inbox me. Or if your leader who sent you this video, just get back to him and ask him, how do you get access to this scanner? It's a subscribe-based scanner. And now, those of you who are subscriber and members of Plan B Express Cash Flow Solution Club, is free for you. Especially this one is free for you. You have access to it. And I actually have what we call PBS hack, MT5 hack, where it's set up for you, and then you can be scalping, especially volatility. We use it to trade on well trade as much as possible. So thank you very much. Now, if you're a member of our ecosystem, there's so many discounts we give to our sub leaders in their different academy, and so you can get on board to have access to this at a discounted rate. Okay. All right. So thank you very much, and do have a nice time. My name is Felix. I'm the team leader of Plan B Express. Plan B Express, together we rise. I hope somebody has learned and somebody has really, really benefited as much as possible.